Hey everybody, welcome back to the channel. We are back on another episode of Daily Palantir, and folks, we've got some stuff to talk about today. Number one, price target increase on Palantir, the highest we have seen ever in Palantir's history of being a public company. Last night from Dan Ives, Wedbush, $75. This morning, Bank of America, Mariana, $75. We've got to talk about the implications of these price target upgrades, what it means for the stock, and ultimately what it means for the long-term trajectory of Palantir. And then second of all, we've got a really big news update. If you were in the community in early 2022, all the way till the end of 2023, when we finally secured the NHS contract, multi-$100 million contract to have a federated data platform across all the NHS trusts that would be using Palantir's software. It was one of the hardest deals ever for Palantir to get. It really took them about 2 years to secure the deal because they had to deal with all the political parts of the NHS or of the UK media not really liking Palantir. But they got the deal, and 1 year later, now November 2024, we have some updates on what's happening in the NHS, how they're utilizing Palantir, and I want to talk about the implications of what it means for the broader healthcare TAM that Palantir is going after. Lots to discuss. Let's get into it. Okay, so let's get into these price target upgrades. First of all, this is what the stock did today. Nothing too crazy. We did get to 67.88 at 9:35, so about 5 minutes after the market opened. And then we went on a little bit of a fall, and Palantir ended the day up about 0.5%, 64.65, currently down a little bit in the after hours. Ultimately, this is kind of what we expected. I mean, look, the stock is trading at pretty elevated levels, $145 billion market cap. You're probably going to get these pops in the stock that are exciting based on news and events that happen. But you just got a lot of sellers that are willing to take profits on every incremental dollar because they think that the valuation is getting up there, which, look, it's fair. The valuation is getting up there. But at the end of the day, there is a reason why we are holding 60. And part of the reason could be, and we've pontificated on the show, many different theories for why we could be 60, more government growth, comping it to OpenAI at 150 billion. There's all these different reasons. But one of the reasons is that the institutions are buying. It is no joke that institutional ownership has gone up from about 44 to 53%. So we know that institutions are buying. And one of the reasons they may be buying is because you've got people like Dan Ives, who is in their ear saying Palantir is a winner. So this is what Dan Ives said last night. The AI revolution is accelerating now, and it's the software sector that will benefit from the use cases of AI set to be prime time in 2025. We are upgrading Elastic and Snowflake to buy while raising our price targets on Palantir to 75 and Salesforce to 375. Software AI age is here. Essentially what Dan is saying is that, and this might be one of the reasons NVIDIA was actually down 4% today. I think another reason is a Bloomberg article about Amazon trying to compete with NVIDIA in the chip game. But the other argument you could say is that semis, which are a cyclical business and ultimately a hardware business that they have to fight for every dollar in gross margin, software is different. 80 to 85% gross margins, reoccurring business streams or reoccurring revenues for their business model, really successful once you can get into a client's enterprise, very sticky if you do a good job, potentially transformational value if you're something like a Palantir. If the use case of the GPU is the LLM, and the LLM has no value unless you actually attach it to something like staffing in a hospital or figuring out the best places to drill if you're a oil company, well, that's what Palantir is promising. And that's what a lot of these software companies are trying to do. Palantir is getting the premium because they're actually executing. But I think Dan's point here is that the software age is here. And from a macro perspective, if you believe the software age is here, then you've got to believe software stocks will do well, and you got to believe Palantir is part of that mix. Now, here's what Bank of America said today, kind of on the same line, but a little bit more tailored to some arguments around government growth. So here's what Mariana said. We think Palantir's penetration in both government and commercial applications is in the early innings. The incremental value adding use cases and increased interoperability are critical for continued penetration and upselling opportunities. We raise our price target to 75 from 55 on accelerated US growth and widening competitive moat, raising our EV sales multiple to 1.2x from 1.0. Software has become a critical asset in industrial production, enabling automation, data analysis, real-time monitoring, and process control. Software represents 17% of US non-residential private fixed income investments versus 11% in 2005. So kind of making that same argument, right, that Dan is making, that software is now getting into a prime time era because the point of software is to make sense of all this AI stuff via the GPUs. The GPUs really don't matter unless you have use cases. And Bank of America and Wedbush believe that Palantir is going to be showing most of those use cases. She concludes by saying, we think Palantir is poised to dominate as companies turn to software and AI to grow margins rather than through scale with fixed assets. The complexity of Palantir's ontology is invaluable to operationalize generative AI as it embraces the security, governance, and data robustness challenges. Even with the surge of new commercial customers, partners, and distribution channels, we see a long runway ahead. We raise our next 3-year commercial growth to 35% from 32%. She also raised her 3-year government growth from 24% to 29%. Okay, so let's break this down. You've got two of the biggest analysts in the context of the Palantir community, Dan Ives from Wedbush, Mariana from Bank of America, that have understood this story since the teens for Palantir, that were ahead of pretty much every single institutional analyst when it came to the company, and are now saying, we were bullish, both of us, at around that $55 range, but we think we weren't bullish enough. And we're going to 75. 75 is a year from now. So these price targets are always a year out, which is, they went from 30 to 50 a couple months ago. We got there literally within a couple months. And now they're going for 75 a year out from now. 75, to my understanding, would basically imply, if we do some quick math, this is not going to be exactly correct, but yeah, about $165 billion in market cap. Currently, we're at 140. So about a $25 billion increase or $20 billion increase if we're at 145. So if you think that 75 a year from now is reasonable, then the question becomes, all right, so if we get a $165 billion market cap, what does that entail in regards to growth? Arnie, who is a good friend and member of the Palantir community, I will put his link in the description. He did some analysis just using a basic DCF, and you come to this argument if you assume $75, 32% revenue growth for over a decade. So for the next 10 years, Palantir has to compound at 32% to justify, on a numerical DCF basis, $75. A 40% free cash flow margin after taxes over the next decade, around 2% dilution, 10% discount rate, and a 5% terminal multiple. And as Arnie says right here, these are strong assumptions. It is extremely rare for a company to grow above 30% for so many years while preserving high marginality. However, Palantir has already surprised even the most bullish investors in many times. So from a numerical perspective, the $75 price target, for those that are wondering kind of what do the numbers look like, I don't even know if Dan and Mariana fully have the most comprehensive quantitative way to justify 75. I think they are trying to get ahead of the story. What is the story? We talked about the story for years, but at its core right now, the story is in 2025, AI needs to show an ROI. There's been enough build out, enough CapEx, like Meta, Microsoft, all these guys need to show, hey, we gave NVIDIA billions of dollars because we're making billions back. And that has to happen. Like if that doesn't happen, that is not good for the broader AI thematic. Palantir, I think, is going to play a role in terms of determining the companies, the institutions that are actually seeing an ROI from AI via Foundry and AIP. So if you think that's going to happen in 2025 and Palantir is one of the core winners that's actually enabling that software stack to really work, then that's a winner, and that's a thesis for Palantir. The second argument is this government growth. Here's another piece of news today that happened. I did a big video last week talking about if Doge would be important for Palantir in regards to getting new deals. Well, take a look who met with Trump today, or I think this was yesterday. Trey Stevens, who is a former Palantir engineer, one of the first 4 deployed engineers, and the co-founder of Anduril, met with Trump to discuss revamping the U.S. military. Anduril obviously gets a lot of government contracts. They're in the hardware space, but also Anduril does a lot of software. Palantir is in the software space. We know the J.D. Vance connection to Peter Thiel. J.D. Vance wanting to get the government more efficient along with Elon Musk. Maybe software is the answer to that. The point is, there are going to be a lot of government applications, at least how I'm perceiving it. And I've done many podcasts with people in the community like Adam, who does some crazy amounts of research trying to find all these different deals that we're getting in the government space. And if you believe the government is spending more on AI, you believe that the military is kind of changing how they procure software, and you believe that they're trying to become more efficient, which maybe could be bad for Palantir because maybe they don't want to give Palantir money. Maybe it's good because they want to give Palantir more money so they don't have to give a bunch of other companies little bits of money, and they can have Palantir kind of do the whole thing and they know it's going to be effective. It can go both ways. But the point is, if you believe it goes to the upside and you believe government growth continues to CAGR at 40%, right now it's at 40% as of Q3, then $165 billion on the market cap, although it's going to be tough to numerically justify the broader qualitative story around AI, LLMs being a commodity, and ontology being something that matters, aka Foundry, and the government growth compounding at the levels that it's at, that makes Palantir exciting. Now, Having said all that, I will say I'm not buying at 65. I'm just not. I think the valuation's up there, and I think it's expensive. And I from the people that I've talked to in the Palantir community, no one's buying at 65. Like literally no one. And I know a lot of people, and no one's buying at 65. And if you are buying at 65, that's okay. I think you just have to be ready for the risk reward because we've run a lot, right? And you're buying a stock at essentially all-time highs. However, someone is buying at 65, even if it's not me, and even if it's not a lot of the OGs of the Palantir community. So who the hell is it? I think it's the people that read Bank of America's research report, that read Wedbush's research report, and they say, you know what? We got a couple $1,000,000. We want to get some Palantir, throw it in there, and we'll look at it later. I genuinely think that's what's happening. Is there an element of like retail FOMO? I got to get into Palantir because of going to the moon. Sure. But I don't think, I mean, from the retail that I've talked to, most people are taking profits. They're selling. There was a guy on the live stream the other day, sold 20,000 shares and said, hey, Amit, congrats. Thank you for all the DD. I just sold 20,000 shares. I was up 300%. Like there are people that are quite literally taking their profits because they are happy and they have trusted the work they put in and they feel that they deserve a reward, which is totally fair. And I bring that up to say everyone that I talk to is either selling or holding. They're definitely not buying, but someone is. And if someone is buying, to me, I could be wrong on this, but I feel like it's the toots. And if the toots are buying, the toots could sell one day when they're not happy with Palantir. But right now they're buying and they like Palantir. And Wedbush and Mariana are kind of putting it in perspective. You had some other price targets last week from Brent Thill, who reiterated and underperformed, $28, valuation unsustainable, yada, yada. Reasonable arguments on valuation. You will not hear a peep from me saying that the arguments aren't reasonable on valuation. However, they're giving it almost no premium around the AI thematic, around the government growth, around Karp being a visionary, kind of seeing where things are going. Karp's coming out with a freaking book in February. I mean, like that in and of itself to me is marketing for Palantir. More people are going to discover what Palantir is. The bootcamp methodology. You're not putting a premium on any of the differentiated elements of Palantir outside of traditional software companies. Now, you can put a premium on that and say it's not worth 65, but is it worth 28? I don't think so. You know, is it worth 33, 34? I don't think so. I think a lot of these analysts are being ideological right now and raising their price targets. We did have Rishi give us $11 from 9, so thanks for that. But Mariana and Dan Ives are not being ideological. I think they're, they could have left their $50 price target and say, hey, it's above our price target. That's great. And we'll adjust it when we see new numbers. I think they're trying to make a statement here by saying, no, we think the story is serious. We think the story is not going anywhere. We think the story is differentiated. And we think the valuation, when you look at forward growth estimates to try to deduce what a $165 billion market cap would look like, that's how you get to these numbers. Quite frankly, I think a lot of the institutions buying think Palantir is going to $1 trillion. I really think they do. And 150 billion is less than $1 trillion. Is it justified at 150 billion right now? You can make the argument that it's not. But I think a lot of these guys think Palantir is one of those generational companies. And as a result, they want to get ahead of the story. They're having some institutional FOMO. You're seeing that hold up the stock. And I think that's what's giving us momentum. Not to mention, we're joining the NASDAQ exchange tomorrow, November 26th. So that'll be important. We're not part of the QQQ ETF yet. Maybe December 20th, we get rebalanced into that. We need to be part of the NASDAQ exchange to be in the QQQ ETF. If that happens, that's a big deal. Now, maybe that was priced in. We ran up 10% when the announcement came out. So maybe nothing happens. But if something does happen, AKA institutions say, hey, we got to start buying some Palantir to get our allocation sizing correct, then that could also be another catalyst. Ultimately, let me know what you guys think about the price targets in the chat. Dan says the software age is here. Mariana says government growth and commercial growth, along with Palantir's unique differentiated products, are fundamentally different. It deserves a premium. We believe Palantir is going to grow into this multiple even more. Either these two are overly bullish and they don't get the thesis, or the other analysts are too stuck in the way they analyze traditional software companies and they're not seeing the broader picture, the broader moat of Palantir. And obviously, I lean towards Mariana and Dan understanding Palantir, and that's why they're more bullish on them. But I can see other perspectives. It is pretty cool, though, to get a $75 price target. It is pretty cool. And it's pissed off a lot of people that have said Palantir is the biggest bubble in the world. We talked about that last week. If we go back down to $30, I will agree that a 50% drawdown, yes, it was a bubble. But if we don't get that crazy drawdown and we see, the rest of the street start to come along to what Palantir is doing, and Palantir can accelerate the growth. If we get to 40% growth next year, look, I don't know if that'll happen, but the point is, this is a growth story that the street's willing to take a bet on, and Mariana and Dan believe that it is worth more than what it is today. All right, last thing I want to talk about, and this is really, really cool. So that NHS contract, it was hard to get. If you were part of the Palantir community at the time, you know how hard it was to get that contract. There was a lot of fighting. There was a lot of media companies run by certain special interests that were very anti-Palantir. And I mean, there were like bot farms on Twitter spamming Palantir's evil. Like, it was just a whole crazy amount of shit that everyone went through. And at some point, a lot of people thought maybe we don't get the contract, but we ended up getting it because Palantir software is really the only thing that the NHS wanted to take a risk on versus the competitors. Now, before we get into this, I know I have a large UK audience. Please put in the comments, what do you currently think about the NHS? From my understanding, most of you have said we value the socialized healthcare system that gives everyone the right to healthcare, essentially, but we hate the inefficiencies. And in my opinion, if you value something that is socialized but is inefficient compared to like a free market system, then something has to be the middleman to resolve the inefficiencies of the system, but the moral and ethical values that a country, in this case, the United Kingdom, has on how to govern a society with healthcare. And the middleman to me is technology. It's Palantir. And so I think if you're the NHS, if you're in the UK, you kind of got to come to the conclusion that either we're going to have a free market system and then have not the socialized values we care about, or we're going to have a socialized system, but we need to have some middleman. And I think that middleman ultimately is technology to resolve the patient backlogs and wait time. So let me know in the comments if you are from the UK and what you think currently about the NHS. So couple of headlines. So right here from the Financial Times article, a total of 87 acute NHS trusts and 28 integrated care boards have signed up to use the federated data platform. The report said that they had exceeded their target of getting 71 out of 215 NHS trusts signed up by the end of the year. I'm not even going to try to pronounce the names because I'm going to get this wrong, but I'm just going to say 2 other trusts. One of the FDP's pilot sites has reported a 37% reduction in the number of days patients remained in hospital after they were ready to go home. And NHS England data analysis found that hospital trusts using the NHS FDP treated on average 114 more inpatients in theaters every month after introducing the tool. These are pretty damn good results for Palantir in its first year working with the NHS. But that's not all. We got Lewis Mosley, who I had the privilege of meeting at Palantir's AIPCon. He's the guy who is the executive VP of Palantir's UK business, and he was on the front lines trying to get this deal done. I remember when I was talking to him, I was like, so how hard was it to get this deal? And he was just like, it was pretty hard. I mean, I can imagine. It was a tough thing to be able to resolve, but they ended up getting the deal. So he mentioned 6 more things that have happened in their work with the NHS. Number 1, he says NCIC NHS, where Palantir is saving theater planners over 3 hours per week and allowing the trust to perform up to 10% more surgeries. Then he says Croydon Health, I'm probably saying that wrong, I'm sorry, where same-day cancellations by patients have fallen by 38% and the trust has seen 12% increase in theater utilization. Then Chelsea Westminster, where waiting times for urgent suspected cancer cases referrals reduced by up to 4 days. That's amazing. And then UHD NHS, where the software has created the capacity for an additional 2,500 surgical treatments per year. And then he has a link to even more examples that I will put in the description. He says NHS staff are the heroes. It's a huge privilege at Palantir to see our software helping them to treat even more patients safely and efficiently. So this is really, really, really awesome to see. Ultimately, you want systems that are designed to help the majority of people actually work. I think you need technology to do that. Palantir is showing real use cases and solutions to certain trusts in the NHS. Doesn't mean the whole NHS is fixed, but I think it's a 10-year journey. And we know the NHS has spent a lot of money on IT solutions in the past that haven't worked. If this investment in Palantir is something that actually solves problems, like legitimately can solve backlogs and wait times, and then can have that expand and compound in terms of the progress they're making over the next decade. And you could wake up in 10 years in the UK and really feel that the NHS is efficient. Then what does that mean for Canada? What does that mean for Brazil? What does that mean for Sweden? What does that mean for all the other healthcare systems in the world that are in the sort of, right moral sense that everyone deserves healthcare, but because of the lack of free markets implicating their healthcare system, you have these massive inefficiencies. Again, I think software is the solution there. I think AI is the solution there. And if Palantir is providing the operating platform, the federated data platform for a lot of these different countries in the next 10 years, I'm not saying that's going to happen. I'm just saying if they fix problems in the NHS, you're going to get, I think, a lot of calls from people that are in charge of the healthcare systems across the world that are saying, hey, we saw that you did that in the NHS, which has been notoriously one of the hardest places to make more efficient. Can you do that for us? And then I think you have a lot of hospitals that are going to call Palantir and say, hey, we saw you did this for like this entire country. Can you kind of do that for like 3 of our locations here in Mississippi? Right? Like, I think there's just so many different opportunities for the healthcare TAM to explode. And I think Palantir can capitalize on that. We haven't really gotten a press release by Palantir on healthcare at all. In the beginning of the year in 2024, there was like 5 or 6 press releases in a row of Palantir working with different hospitals. One of my favorite ones was at the end of 2023. I'm going to butcher it, but Policio Geminilli, the Italian hospital, it was ranked the 38th best hospital in the world. They're working with Palantir. So, like, we have been getting a lot of press releases from them in the beginning of the year. We haven't gotten too many towards the end of the year. We got more defense stuff and energy stuff, but you're seeing all these different verticals start to become real. And the NHS is the latest one to justify the healthcare expansion in the vertical that Palantir has been trying to capitalize on. I mean, Shyam Sankar a couple years ago said Palantir is the most underrated healthcare startup. Healthcare is a $4 trillion industry. If every hospital is digitally transforming, we got the Tampa Bay General Hospital 7-year extension for $50 million. If a lot of socialized systems are recognizing they need software and technology to maintain competitive with the rest of the world, and also to be able to actually solve the problems that their users are saying, which goes down to backlogs and wait times, well, then Palantir might be a serious solution to a lot of those problems. And I think that expansion of the TAM, which is what Mariana, to sum it all up, has been saying, is that she thinks the TAM is like just unlimited in terms of all the different use cases they can provide across governments and institutions. It makes you think, how big can Palantir get and how much of a moat can they develop in different industries to provide as much value as they can provide. All right, that's it for me. Thank you everybody for listening and watching this episode of Daily Palantir. All the links that we talked about will be in the description, including Arnie, what Lewis Mosley said, all that good stuff. And my link to Bank of America's report. I don't have the full report yet, but I'll put the link to my Twitter post where I quote like the core 2 paragraphs that she talks about it. I think I should be getting the actual report soon, and that'll be posted on Twitter. So you guys can check that out once the full report is there. $75, Bank of America, Wedbush. What do you think? Do you like it? Do you not like it? How are you thinking of this price target upgrade? Let me know what you guys think in the comments, and I'll see you guys on the next one. Thank you, everybody.